Time now for the economy check. For that, let's go right over to Kevin Hincks live over at the CBO in Chicago. We've got you covered from exchange to exchange. All right, Kevin, we've got fresh economic data hitting the tape on the latest look at inflation. Looking better than expected to me. What are the numbers, Kevin?
Good morning, Diane. Yes, slightly better than expected. A little less better than I thought, but better than expected. Here's the numbers. Headline, month over month, CPI up 0.3. That's in line with expectations, a little higher than last month. Year over year, up 2.3. That's a tenth better than last month and a tenth better than expectations. Core, ex-food and energy, up 0.2 month over month. That's a tenth better than expectations. And then core year over year, unchanged at 2.8%. It looks like, going through the numbers, food down a tenth of a percent. Food at home down 0.4, food away up 0.4. So basically unchanged. Here's what's confusing. Energy up 0.7 with crude oil prices down so much over the month. It was energy commodities up 0.2, gasoline only down a tenth of a percent. And then energy services like fuel oil down 1.3%. So overall, very muted response to energy, even though crude oil sold off during the month of April. A little bit surprising there. What else we got? We got used cars and trucks. New vehicles unchanged. Used cars and trucks down 0.5%. Apparel down 0.2. I'm just going through the chart here. Let's see. Medical care commodities up 0.4. Everything is up slightly. The big jump, I see utility pipe gas. Here's why energy is not down as much. Utility pipe gas service up 3.7%. That may have skewed some of the energy numbers to a little higher, but all things considered, a number slightly less than expected on the year over year headline, a little better in the month over month core and unchanged year over year. So a muted to slightly lower look at inflation, Diane.
So it looks like we had overall better than expected numbers when it comes to this inflation print. That's good news. Hate to see that the shelter costs continue to rise because that's the part that's been sticky. You know, I'm seeing it makes up more than half of all of the increase. And I know that's the part that a lot of people would love to see some improvement there. So how do you approach this today, this from a trader perspective, Kevin? How do you trade this?
I'm seeing, you know, if you look at the news headlines, you're getting a picture of the U.S. economy that I think now that the tariffs are at least coming down significantly from where they were, if that was a hurdle or an obstacle for Jerome Powell lowering rates as inflation comes down, I think the odds of a rate cut second half of the year are going up when the actual odds are coming down. If you look at the CME FedWatch tool, some of the analysis from some of the big clearing firms, I mean, Goldman pushed back their first rate cut to December. I think this gives Jerome Powell more latitude to lower rates, not less. As inflation comes down, if you take away the uncertainty of tariffs, which it looks like it's happening, Diane, I think that gives Jerome Powell more latitude, not less. But the markets seem to be thinking the other way.
Okay, so we'll potentially see what happens next at the June meeting, and of course we get the summary of economic projections then. But it's good to see inflation moving in the right direction. Thanks, Kevin.